The notification arrives at 3:47 a.m. You weren't asleep. The position you opened 6 hours ago, the one you told yourself was calculated, disciplined, controlled, is down 34%. Your hands don't shake. That's the part that scares you. They used to. Now you just stare at the red number and do the math. $340 gone. Out of $1,000. In one night, and the worst part, the part that keeps you in the chair instead of closing the laptop, is that you still think you're right about the direction. That's the disease. And you caught it the moment you made your first trade. Level 1. The believer. You find Forex the way most people find it. A YouTube ad. A friend who won't stop talking about pips and pairs. A screenshot of someone's MT4 account showing $14,000 profit on a Tuesday afternoon. You don't know what MT4 is yet. You don't know what a pip is. But you know what $14,000 on a Tuesday looks like. And it looks like freedom. You open a demo account first. This is the smartest thing you will do for the next 6 months, and you don't even realize it. The demo account gives you $10,000 of fake money and a live chart, like $3,200 in your first week. You tell yourself, this is proof. It is not proof. It is dopamine with a trading interface. You fund your real account with $100. The broker is offshore. The spreads are wide. The leverage is $1,500, which means you can control $50,000 with $100. Which means you can lose everything in 11 minutes on a volatile news candle. You don't know this yet. Your first trade is Euros SDUSD, long. Because the candle looked like it was going up. You make $4. You screenshot it. You post it. This is who you are at level 1. Excited, dangerously uninformed, convinced that the market is a code you're already beginning to crack. You spend $47 on a course that promises a winning system. You buy an indicator called the Ultra Signal Pro from a Telegram channel. You watch 6 hours of YouTube content per day and retain maybe 11% of it because none of it has context yet. At level 1, the market doesn't know you exist, but you are completely, totally convinced that it's about to make you rich. Level 2, the survivor. You blow your first account in 3 weeks. Not a dramatic blow-up, just a slow erosion. A losing trade you held too long, a revenge trade you placed too fast, a position you doubled down on because you were certain, then a news event. Non-farm payroll, a term you now know, spikes the market 140 pips in the wrong direction, and your $100 is $6.22, and you close the app and don't open it for 4 days, but you come back. This is what separates you from the people who just lose money and leave. You come back. You deposit another $200. You start a trading journal and a Google Doc that you'll abandon in 11 days. You find a free price action course and something clicks. Support and resistance. Structure. The way price moves in waves rather than straight lines. You start to see the chart differently. Less like a lottery, more like a language. You lose this account too, but slower, and with more understanding of why. At level 2, you are learning the most important lesson in trading, and it is not a strategy. It is that the market will take money from you until you stop thinking emotionally and start thinking structurally. You do not fully believe this yet, but you are beginning to feel it. You open a third account, $300 this time. You set a rule, never risk more than 2% per trade. You break it on the second day, but you broke it only once that week. Progress is not profit here. Progress is the number of rules you follow under pressure. You are surviving. That is enough for now. Level 3. The student 6 months in. You have lost roughly $900 across 3 accounts, but something has shifted. You stop chasing signals. You stop buying indicators. You unfollow the Telegram channels that post VIP entries and charge $99 a month for trade alerts you can't verify. You start watching institutional traders on YouTube, people who talk about order flow, liquidity, market structure. The content is harder to understand. That's how you know it's real. You build a system. It is simple. Almost embarrassingly simple. You trade one pair GBP/USD. You trade one session London Open. You look for one thing, price sweeping a previous high or low, then showing reversal structure on the 15-minute chart. Entry, stop loss, 2-to-1 take profit. You do nothing else. For 30 days, you paper trade this system. It wins 58% of the time. At 2-to-1 risk reward, that is mathematically profitable. You fund a fourth account. $500. You follow the rules. For 22 trading days, you follow every rule. You end the month up $190. It is the least exciting 190 to have ever made, and it is the most important, because for the first time, you understand that trading is not about prediction. It is about probability and process. You had an edge. You executed the edge. The edge paid you. At level 3, you are no longer gambling. You are trading. Imperfectly. Inconsistently. But actually trading. You tell almost no one. The people who blew up their accounts listening to your early excitement don't need another update. This level is quiet, private. The work happens at 6 a.m. before anyone is awake. It happens in spreadsheets and in journals and in the slow, grinding accumulation of data about your own behavior under pressure. You are a student. Finally, genuinely a student. Level 4. The operator, your account hits $2,000 for the first time. You started with $500. It took 4 months. By most standards. By the standards of the guy who posted that $14,000 screenshot that first pulled you in, this is nothing. By the standards of where you were 18 months ago, it is everything. You are consistent now. Not perfect, but consistent. You know your system. You know your psychology. You know that Tuesday afternoons after major news events, you make worse decisions, so you don't trade Tuesday afternoons after major news events. You know that when you've had 2 losing trades in a row, your third trade will be emotionally loaded, and you will either avoid it entirely or take it at full size and journal. Why afterward? Self-knowledge in this business is worth more than any indicator. You add a second pair, USD/JPY. The pairs have different personalities. GBP/USD is aggressive, fast, reactive. USD/JPY is slower, more deliberate, driven heavily by macro sentiment. You adapt your entries for each. The same system, slightly different application. Your risk per trade is $40. On a $2,000 account, 2%. Some weeks you make $180. Some weeks you lose $90. The monthly average is climbing. At level 4, the market is no longer a mystery to be solved. It is a process to be executed. You think in terms of series of trades, not individual outcomes. You understand that your last trade, whether it won or lost, tells you almost nothing meaningful about your next one. You get a small following online, 30, maybe 50 people watching your progress. You share your weekly recaps, transparent, honest, including the losing weeks. People trust you because you show them the losses. You are an operator now. You move through the market with precision, not excitement. The emotional chaos of level 1 feels like someone else's life. Level 5. The professional account balance, $12,000. It took 2 years and 4 months to get here from your first $100 deposit. Along the way, you deposited a total of $2,300. The rest is compounded returns, slow and structural, built on a process that almost no one around you would have the patience to follow. You quit your job, not dramatically, not impulsively. You had 8 months of living expenses saved. You had 12 months of trading data confirming a 6.2% average monthly return on capital. You ran the math 47 times. You quit on a Monday, calmly, and started treating trading like the business it now is. The moment you quit, everything changes. The pressure is different. When you lose $600 in a week, it is not a bad trading week. It is rent money behaving incorrectly. The psychological load of professional trading is something no course prepares you for. Some mornings, you sit at the desk for 40 minutes before opening the platform, not out of laziness, out of calibration, making sure your mental state is positioned before you interact with the market. You add a third income stream, a private mentorship group, 12 people, $200 per month each, $2,400 per month in training income that de-risks your personal account from the pressure of being your only source of revenue. This is the first time you understand that the best traders in the world don't just trade, they build ecosystems around their expertise. At level 5, people ask you for advice and you give it carefully, not because you're protective of your edge. Your edge is execution, not information. But because you know that advice in trading lands differently on different psychologies, and the wrong framing can cost someone money they can't afford to lose. You carry that weight quietly. You are a professional. The market does not care. But you do. Level 6. The authority your account is at $80,000. Your mentorship community has grown to 340 members. You've produced a structured curriculum, 11 modules, live weekly sessions, a private Discord, with real-time market analysis. Revenue from the community is $28,000 per month. Consistent. Scalable, almost entirely passive once the infrastructure is built. You have a brand now, not intentionally, but organically. Your name means something in a specific corner of the internet. When you post a trade idea, people screenshot it. When you call a level significant, people watch it. When the level holds, your reputation compounds. When it doesn't, sometimes you post the analysis of why, and your reputation compounds differently but equally. At level 6, you understand something that level 1 you could never have grasped. Authority in trading is not built on wins. It is built on consistency of process over a long enough time horizon that people trust your framework even when individual outcomes miss. You hire a video editor, an operations manager, a customer support person for the community. You are no longer just a trader. You are a trading business. The market is still your anchor. You trade every London session. You journal every trade. The discipline that got you here is the discipline you protect above everything else. Because you have watched enough people reach this level and let the business distract them from the craft that built the business. Your risk per trade is now $800 on an $80,000 account. Still 2%. The number is bigger. The percentage is identical. That is not coincidence. That is religion. People at level 6 become dangerous when they confuse platform size with trading ability. You have seen it. You watch former peers with larger followings than you take increasingly reckless positions because their audience rewards boldness over accuracy. They blow up eventually, publicly, and their community evaporates faster than it built. You stay quiet. You stay consistent. You are the authority, not because you claimed it, because you outlasted everyone who tried to shortcut their way to it. Level 7. The Architect Your Personal Trading Account, $414,000. Total monthly revenue across trading returns, community subscriptions, course sales, and a newly launched prop firm partnership, $95,000. You are managing capital for others now. Not a hedge fund, not yet, but a small pool of 6 investors, sophisticated, people who found you through the community and asked again, then signed agreements drafted by an actual attorney, allocating between $30,000 and $150,000 each to your strategy. You manage $480,000 in external capital. You take 20% of profits. Industry standard. You earn it. At level 7, the game is no longer about you in the chart. The game is structure, risk models, drawdown agreements, monthly reporting, investor calls where you explain not just what the market did, but why your system responded to it the way it did, and why that response was correct even when it generated a loss. Losing money that belongs to other people is a different psychological experience than losing your own. It requires a different emotional architecture. You had to build that architecture deliberately, over many months, before you accepted external capital. Some people never build it. They take investor money before they're ready, and the pressure warps their decision-making, and they blow the accounts and the relationships simultaneously. You didn't do that. You waited. Now you sit in a home office in a city you chose deliberately. Low cost, good time zone for both London and New York sessions. Quiet. And you operate a system that generates significant money while requiring less of your direct attention than it did 3 years ago. This should feel like freedom. It mostly feels like responsibility. You think about the 6 investors every time you open a trade. You think about the 340 community members every time you post analysis. You think about your editor, your ops manager, your support person. Their salaries come from the machine you built. Every decision you make carries people inside it now. At level 7, power is no longer about what you can take from the market. It is about what you are responsible for protecting. The market does not know your name, but your decisions move through it every day. And the weight of that is something you feel most acutely at 3 a.m. when everyone else is asleep and the Tokyo session is opening. And you are checking your positions with the quiet focus of someone who has no choice but to be right more often than they are wrong. Level 8. The institution account balance, $1,500,000. External capital under management, $3.2 million. Monthly net revenue, $180,000 to $140,000, depending on market conditions. You don't talk about these numbers. Not online, not in the community, which has now grown to 1,100 members and operates almost entirely without your daily involvement. Not at the small, unremarkable dinners you occasionally attend with other traders at your level. People who, like you, have learned that the quieter you are about what you have, the longer you keep it. At level 8, The game is different in a way that is almost impossible to explain to anyone below level 5. You are not chasing anymore. There is nothing to chase. The account grows because the system is sound and the process is protected and the risk management is non-negotiable. You no longer feel the wins. A $12,000 day produces the same internal response as a $3,000 day. A quiet note in the journal, an update to the spreadsheet, a scan of the next session's key levels. The losses still sting. That part never leaves. You have made peace with that. A trader who stops feeling losses is a trader who stops respecting risk. And a trader who stops respecting risk is a trader who eventually becomes a story that other traders tell at level 1 as a warning. You have a small team now, a risk analyst, a quant who builds and backtests supplementary systems, a CFO who handles the fund structure, the tax optimization, the investor reporting. You meet with them weekly. You trade alone. The isolation at level 8 is real, and it is chosen, and it is the cost of the thing. Most of your old trading peers are gone. Some stopped trading. Some blew up. Some made enough to leave the market entirely and built other things. The ones still here at this level, you can count them on one hand, exist in a strange parallel world where proximity is rare, and communication is sparse, and the shared understanding between you doesn't require many words. You built this from $100? That sentence sounds like a motivational poster. It is not. It is a fact with a body count of thousands of failed accounts, 2 years of poverty-level income, one deeply damaged relationship that took 3 years to repair, and a psychological rewiring so complete that the person who placed that first Euro-USD trade and screenshotted the $4 profit exists only in a journal entry from 4 years ago. You are not that person. You are not sure, some mornings, exactly who you are. What you are is the system. You and the process have become indistinguishable. You wake at 5:30 a.m., not because you set an alarm, but because your body has optimized itself around the London Open. You eat, sleep, and think in terms of risk and structure. Social events are scheduled around session times. Vacations are taken during low liquidity periods. You chose this. Every level, you chose this. The chart on your second monitor shows the current GBP/USD price. It has been moving for 247 years in various forms. It will move long after you stop trading. The market is not a place you conquered. It is a place you learned to survive inside, sustainably, systematically, expensively. You close the laptop at noon. The positions are set. The stops are placed. The system will do what the system does. Somewhere across the city, in a small apartment with a laptop balanced on a kitchen table, a 23-year-old just funded his first real account. He made $4 on his demo trade this morning. He took a screenshot. He thinks he understands what this is. He doesn't, but he will, or he won't. The market has never cared which one.